Good afternoon, everybody. This is our first airing of Decrypto Markets, brought to you by Forex Lens. This is going to be a standalone service. Eventually, we're going to be airing it for free. In the meantime, just to gauge some interest and to see if folks are going to find value in it. There's if you don't know who makes up the team here, it's I'm the live trader and educator, and then there are two other gentlemen who run everything else. They have the hard part of the job. They do all the marketing. They do all of the email campaigns, the making sure everything is streaming and coming through correctly and adequately. So, this isn't a big multi-man operation. We all have the three of us each have our specialty. It's an equal group. It's an equal commitment. But one thing that we all have in common is that we know that there is a whole lot of crap out there. There's a whole lot of terrible education. There's a whole lot of lies. There's a whole lot of things that are just sold to people to give them the idea or hope that they're going to be millionaires in a month. And we know that that is not the case. One of the biggest issues I have with the markets is that 90% of everything that you find online is either inadequate or it is meant to entrap you and to take advantage of you. And I'm sure a lot of you who are watching this, if you have not had that happen to you yet, that's good. And I would really encourage you to stay here. With the Forex Lens is the Forex trading component that we do. We've been doing that now for a while, and that's been very beneficial for folks. A lot of people have done very well going over the education and signals as well, and that's going to continue on in here too. So for the Decrypto markets, we're going to do a lot of this is majority technical analysis. Is there going to be some fundamentals? Sure, but you're going to see whether or not my style and approach to and the theory, I guess, that I use in any market, doesn't matter what it is, if it's going to be something that is compatible with you, then I hope it is. And if you don't like it, then thanks for stopping by, and I wish you the best. But for the rest of you, I welcome you, and I look forward to being here with you Monday through Friday at this time, and doing everything we can to go over these cryptocurrency markets. First thing I wanted to pull up real quick. This is not. This is. Let me get rid of that now. This is the dollar index. I just want to keep an eye on it because the dollar index is a basket of currencies that perform against the dollar. So this is telling us the relative strength of the dollar against the euro. It's the euro, the yen, the Canadian dollar, the Swedish kroner, if you can believe it, and the British pound. And I know I'm missing one. The Swiss franc. All right, let's get going. Let's go ahead and take a peek over at Bitcoin. Now, Bitcoin, if you are in the Forex Lens group and you're watching this, this won't be anything new to you. But we've been talking a lot about Bitcoin's overall mood and method and its pattern that it likes to show. And I think the best way to show this is by looking at past price behavior, because the simple thing is that all markets follow a pretty set pattern and a set behavior. Now, not every single thing does exactly the same thing, but there is a large amount of consistency where you can build up a lot of positive expectancy in your trading. For Bitcoin, I want to go back all the way to 2010, okay? And I want to take a look at the summertime. All right, so let's go back to 2010. Let's look at, and let's Drawing, and let's do, where's the rectangle? Okay. So let's look for the summer months here. Let's go with, well, actually, this goes all the way to August. Oh, back further. So back in 2010, if we go all the way back to July and then through September 22nd, because that's the first day of fall, what do we see with summertime volume initially right away? It really can't read a lot into this this behavior here. It's the first open, but we see a rising in prices going into fall. Zip on over to 2011, and let's look at the price action in that range. Where are we at? Oh yeah. We see in from June 22nd through September 22nd, we see pretty much slightly lower prices, not a huge major trend lower, but then we see it fall off in the fall, and then it evens out. So now let's look at the summer of 2012. This will all make sense as we get going in here. Summer in 2012, looking for June 22nd and all the way to September 22nd, roughly. We see rising prices, and then in the fall we see kind of a muted trading to flat and then higher. 2013, for June 22nd or thereabout, all the way to September 22nd, we see pretty rising prices to flat prices, followed by a rally in the fall. About 2013 is when you start to see something happen that is fairly common, we're not in the middle of the lesson. We're kind of at the beginning still. I'm just going over this past price history. I haven't missed anything profound. So this is 2013 summertime, start of fall. We see those rising prices. 2014. Let's do the same thing. June 22nd. To September. We actually see a decline in prices. Going into the fall in 2013, we actually see it fall. Then 2015, in June through September, flat rates, rising prices into fall. 2016, we're almost done here. This painful process is almost over. June actually had a market high going in, and then a sell-off period into September, followed by rising prices into the fall. We see this happening quite often. Then we get into, that was 2016, then we look at 2017. I don't know if we really need to analyze what happened in 2017, but we might as well. So June 22nd, all the way to September 22nd. And then what do we see? We see this going up. Okay? So we see a pattern that is fairly consistent. We see we don't see a lot of trending prices during the summer. Actually, in any market, if you're a Forex trader or a futures trader or an options trader, you probably know that already, that the summertime is kind of you either hate summertime as a trader or you like summertime as a trader. If you like to trade, you hate summer. If you like to spend time with your family and go on vacations and not have to worry about a lot of stuff happening in the market, then you really do enjoy the summer. All right, let's just do a quick little review here. So we see all the way back in 2010, pretty flat prices. Then we go to 2011, flat prices to rising. This pattern looks familiar, doesn't it? Right here. 2013, same thing. That pattern looks familiar, doesn't it? 2014, we had a opposite move. We actually had a long downturn there. I believe this was around. Was this the? I don't remember if this was the Mount Gox issue. So in 2015, what did we see? Same pattern that we see all the time. 2016, same thing. 2017, and there we are. And now we are in 2018. And what are we observing? Well, from June 22nd to current, we've had a basing of price action going forward. If you've been watching, if you're a Forex Lens subscriber and you have already seen this, again, this won't be anything new, but as we go to the we've had a couple Bitcoin issues that we've been following and those ideas. So if I can find the most recent one. Okay, here we are. So back on June 18th, talked about a bottom being found in this area, and that there would be a pattern called a mirrored foldback. I know this looks very kind of probably creepy or like a whole lot of stuff on the screen that doesn't make sense. That's okay. If you watch this live stream, I will go over all of this kind of analysis and how you can apply it to your own trading if you choose to. But this type of behavior was identified by one of the greatest living contemporary technical analysts, Michael Jenkins, and he called it the mirrored foldback. And he actually did not discover it himself. I cannot remember. It's in one of his books. He kind of discovered it, but he worked on it with a peer of his who was a pit trader. Was a pit trader. I think he's since passed away. However, anyways, this is the kind of behavior that we would expect to see Bitcoin emulate moving forward. We would a foldback is really nothing than a repetition of the same kind of price action. Now, it doesn't have to meet the same value areas. For instance, if it was trading at 7,100 here, that doesn't mean in exact the same amount of days it's going to be at 7,100 there. But what we're looking for is there a high in this swing area? Is there a low in this swing? We're looking for like high swing, low swing, high swing, low swing. And for the most part, or maybe half the part, it has been following that kind of structure. Yesterday, though, I kind of updated it to show that if we move the foldback pattern forward, then we have been following it this direction now. And so based on this market structure, how we would observe Bitcoin's price action to move using this market geometry, this is a square of 52. I don't know why it is doing that paper trading and bringing up Owanda. I have no idea what is going on here. This is, if you were watching the Forex Lens stream, you would have seen that the what do you call it? The pound, for whatever reason, the British pound was trading at like $600. There's something wonky going on with with the data. I don't know why it is, but yeah. Anyways, if I scroll out here, go to the daily. This is the square 52. All right. it's a very, this looks noisy. This looks really, really like a lot of noise, but it is actually, for me at least, this is the most logical and linear way to approach the market and to trade it, because angles are more sensitive. Price is more sensitive to angles than it is to fixed horizontal lines. Horizontal price levels, there's a significant amount of variance that you have to give them, where you would find the high and the low of something. So, but with market geometry, you can look at a market and you can see the areas that you can observe where candlesticks are halted. Where if you're not looking at any of this, it looks, you wonder, okay, why did price stop there? Why did price get halted down here? Why did price drive quickly through this area and that area? Well, with market geometry, you get a better answer to that, because market geometry is very efficient and effective at showing how natural prices natural prices move, and how they're not random, and they're not an aberration, and they're just a natural phenomena. So when we're looking at Bitcoin's current price action, you can see that this Gann arc in here has acted as a very normal area of resistance. It's continuing to hold that on the daily, and it's finding support on this angle down here. And we follow what's called the rule of, Gann had a rule called the rule of angles that stated that when price closes and trades below an angle, it'll move to test the next one. We can see that in maybe a little better representation using the square of 144 here. And looking at Bitcoin, we can see frequently that the rule of angles is very efficient, it's very effective, and Bitcoin, because it's such a new market, it really respects market geometry to a high degree. But I'm trying to move over here. We can see that the rule of angles does play out very nicely. So when price broke this angle, it fell down. And here's the deal: like, I did not put these angles here just today. If you are a Forex Lens member, you know this, because you could go back months in the past and see that these drawings have been here for a long time. I have not changed anything. I haven't put them here just for this group. I really hate, and you should too, anybody that says their method works because they're using past price action as evidence for it, which is not supportive at all. So what I'm saying is even though I know what I'm saying is truthful, don't take my word for it. You have to check things out yourself. The best evidence I can give of something would be to use something from, July 10th, so 13 days ago. I talked about Bitcoin breaking out of this regression channel, forming that head and shoulders pattern, and then riding this angle up and all this other jazz here. But if we hit the play button, we can see that is fast forward in time, that this has played out very nicely so far, and so forth. The rule of angles, again, Gann stated that when you break an angle, it'll move to test the next one. So this angle here broke, we moved down, we tested down below here, and then we rode it for a little bit, broke this angle down, tested it, and we've shifted. Now we found this angle as support, and so when it has found a support, it will move to test the next angle, which is where it's all the way up here near this 89, really near this 8900 value area. Okay, so that is where we should find the next strong area of resistance, is right up against this middle harmonic here at 88.22 and up against this angle. Excuse me. Now, regarding the structure moving forward, zipping on back here to the square of 144, I want to go to the square of 52. I see a pretty clear path and direction that Bitcoin will take. I expect a lot of there's a huge confluent zone of angles here. So unless Bitcoin were to shoot through up above here, unless we were to burst all the way through this zone and above this pivot area, which I think would have to, that would be weird. There's a lot of resistance in this entire zone here that the only way that Bitcoin could get up to 80 above the 8,000 area and hold is on a massive spike higher. Now that could happen. That definitely could happen. We've seen Bitcoin move mountains before. It's not it's definitely not outside the realm of possibility. But if I'm looking at the market structure, I just see a lot of consolidation here for a little while until we get up to around probably Friday-ish, and then we should see finally a drive higher. But if Bitcoin were to get above this arc, then we're going to have a fairly steep rise in value, followed by a pretty steep sell-off as well. Not to lower lows, but a good 50% retracement from the new lows. But otherwise, more than likely, I see Bitcoin trading in this channel, ping-ponging between this arc and this angle here. That's a pretty steep rise, but it's still a consistent rise and a consistent angle. Or we could totally avoid this area and just slowly rise up against this angle here. That could be the momentum. And then as we're trading in it, we could certainly find a lot of support. What's nice to see is that on the 4-hour chart here and on the daily, we are above the 3/8 major harmonic, the 75.62. This is going to be a very natural area of strong support, and now that we're above it, we should hope to maintain it. And then even below this angle, below this value area, we have a number of angles acting as support. And then even lower than that, we have this arc that has been acting as a support arc. Really, I would anticipate that the lowest values that we will see up until around the end of August is this arc value acting as support throughout the rest of the summertime. And then going into fall, well, we have exponential rises in the fall, and we could certainly see that play out. So that is definitely the thing to watch. Now, as far as how does this affect some other cryptos, and how is this affecting Bitcoin's value? There's a part of me that is a little suspicious about the rise in Bitcoin right now, because if we look at just a quick glance at a lot of altcoins, we don't see a lot of altcoins in the green compared to all the altcoins being in the red. So what this is telling me is that a lot of these pumped up altcoins over the last week are getting sold off into Bitcoin, and then probably Bitcoin being changed into Tether or True USD or something else. But what this is telling me is that the rise in Bitcoin right now may just be due to people selling their alts. So the pump into Bitcoin is just a superficial pump. That could be a danger, because we've had a pretty steep rise here, and again, unless we see a lot of volume come in to break out of this bullish pennant, we're gonna fall back down to that 7,500 value area, or maybe lower. But this is not showing a whole lot of sign of having a large push higher on the shorter time frames, but definitely we do anticipate higher moves. Taking a peek at Ethereum. Ethereum's got a pretty cool chart moving forward here. We're getting up against a new time, the end and beginning of a time cycle in Gann's law of vibration. It's a 192-day cycle. And as we're drifting out of this final arc and getting into this zone, on the 25th, which is 2 days before a lunar eclipse and a full moon, it's nice to see this basing action happening here, and we could observe a fairly substantial pump in Ethereum's price. As we get closer to at the end and beginning of time cycles, if we're at any significant swing high or swing low on a longer time frame like the daily or the weekly, we need to pay attention to those, because those are often the signs that we need that a trend is going to change. If we take a look at the weekly and just clear all this off, the weekly is in a very, very supportive position for higher prices. We are extremely oversold in our oscillators, and we are in supportive buying conditions in our composite index. There's continual on the daily chart. If you go to the 1 day and the 3 day charts, we have this continual bullish divergence forming. A good example of that happening is in Bitcoin. We've had a series of divergences pop up, and bullish divergences pop up, and if we want a good indication that there's a change happening in the trend, we can see that the volume last week was fairly significant. It was still below the 20-day average, but it was certainly above the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, the past 13 weeks volume. It has surpassed that on the weekly. And so we should expect to see some follow-through going into this week, hopefully. If you want to be bullish, you want to see more volume pour in. Going on to the future here, or looking at it from a different perspective now, again, if you're a Forex Lens member and you've seen this before, it's nothing new. But if you are new here, this may look a little strange to you. But there are 3 forms of financial analysis that we can use. There's fundamental analysis. I think everybody knows what fundamental analysis is. That is, used like the news, economic events. If you are an equities trader, you're looking at your SEC filings, your forms, you're reading quarterly reports. That's all fundamental information. Fundamentals are an entirely lagging form of analysis. They're an entirely value finding form of analysis. They cannot predict and cannot be used to help identify a specific price area or a specific turning date. Then the second form of analysis, which all of you are probably familiar with if you're here watching this, is technical analysis. And technical analysis is a mix of lagging and leading analysis. It's mostly lagging analysis, but with certain phenomena like divergences, we can turn lagging analysis into a form of leading analysis. And there is some leading forward forms of analysis and technical analysis, but for the most part, it is still a lagging form of analysis. But it is a more reactionary form of analysis too. Then we look at the third part of financial analysis, and that is something called, prepare yourself for it, get your tinfoil hats ready, financial astrology. And financial astrology, please remember this, has nothing to do with how you can get that Sagittarius to fall in love with you as a Libra because you're in the sign of blah, blah, blah. It has nothing to do with your horoscope. Financial astrology is mathematical psychology based on astronomy. Very simply, all right? If I look at this aqua bar here, this says that the sun is opposite Pluto. The sun is opposite Pluto, okay? All that means is that they are 180 degrees from one another. All right? If we were to look at them, and geocentric means that as we're looking at these two, as we're looking at Pluto and the sun in the sky, the Earth is the center point of that, then we are looking at them 180 degrees from one another. If we look at it right here, we can see that here's the sun, and then a few days ago, where's Pluto at? You're all the way out here. There it is. A few days ago, we were in opposition. The sun, Earth, and the Pluto were all 180 degrees. They were just across from one another. That's called an opposition. Opposition is just another way of saying 180 degrees from one another. Likewise, if you see, if you do any financial astrology and you see something like, somebody will say, well, and I have to tell you, people who are advocates and teachers of financial astrology need to do a better job of like making it not so freaky or weird looking or sounding, because financial astrology is probably one of the weirdest things you'll ever come across. But if you see something like, let's do Mars. Okay, if it says Mars in Aquarius, okay, Mars in Aquarius is like, well, what the hell does that mean? What kind of creepy chicken bone crystal ball thing are you talking about? Mars in Aquarius is just another way of saying, kind of an easier way to remember, maybe just because I learned it, like the signs here, okay? So this is the sign of Aries. All Aries is in financial astrology is it's just telling us, well, it is the degrees of between 0 degrees and 30 in a circle. And then between 30 degrees and 60 degrees, that's called Taurus, right? That is all we're talking about. It is financial astrology is mathematical psychology based on astronomy. Astronomy is the science is a science and a study of celestial objects or things in space. I am not a genius at this at all. I just want to know, how does it relate to my trading? And I was a doubting Thomas when it came to this stuff, but it is very, very effective and very, very useful, because there is a lot of things that happen astrometrically that coincide with the same kind of events happening here. For instance, like every single huge market crash, like the Great Depression or in the 70s and the 80s, they've all been part of a Saturn-Uranus cycle. Anyways, for Bitcoin, I want us to take a look at, well, we don't have to use Bitcoin. We could just use why don't we use a Forex or we could do that. I want to make sure that this is, don't need that. And what is this one? Don't need that. Okay. Let's look at this on the daily. So what you're looking at in these vertical bars is an aspect, okay? This is Sun opposite Pluto, okay? The one in between, the brown ones, this is the Sun conjunct Pluto. Now, conjunction, whereas opposition is they're like 180 degrees from one another, conjunction means that they're sharing the same angle, in that they're both at the same angle, or relatively within the same angle. And so once every year, the Sun and Pluto are across from one another, and then once every year they are lined up with one another on the same angle. So what is interesting about this, that's called an aspect, or this angle, this longitudinal aspect, I like to admit that the technology and knowledge you have is light years ahead of the changing other. Yeah, Sanjay, I will say that a lot of the stuff that is you should whenever you find an education site, do a little investigating into who owns it, because and don't trust education from your brokers. We just kind of went over this this morning in our Forex lens, like uh, uh, not to derail myself here, but if I just take a new chart, I hope that one's blank, but I think everybody has learned that the way to draw a Fibonacci retracement is, okay, if I want to do a retracement from where I'm trading here, where was I'm going from a low to a high to low, then what I do is with my retracement is I draw a Fibonacci retracement from low to high. Okay, that is what we're taught. That is wrong. That is wrong, wrong, wrong. Why is it wrong? Well, because Constance Brown said so. She is she is one of the main curriculum creators at the Chartered Market Technicians Association. She is easily one of the. I would love to meet her and just totally nerd out with her sometime. But she is a trading genius, and she is super, super smart. She's about the closest thing to a modern day polymath I think you could come across. When she says something, I like to put it into practice, and she's totally correct. A Fibonacci retracement by default in TradingView, if we just let me revert this to apply the defaults. This is what a Fibonacci retracement looks like if you're doing it the default manner. You're going from this low to the high, although it didn't keep that. What you should do is you should draw a Fibonacci retracement from the high to a low. All right, if you're wanting to find a price support, if you're trying to find an area of support below the current price, you draw from a high to a low, and you make sure that the 382 that the 618 is below, is towards the low and not towards the high, because it will it's they're sneaky like that. So your brokers always tell you to, and I think even a lot of educators, including myself, have taught the other way, but this is actually the correct way. Anyways, there's a lot of stuff to go over. But coming back into this, so anyways, we're coming back to these longitudinal relationships of and these aspects. In a lot of markets, this Sun opposite Pluto is often a area of a swing high or swing low, and we can just go back in time and see that. Is there a swing high or swing low that appeared somewhere close to this? Yes. I don't know if you would want to consider that close, but certainly there is that relationship. And moving forward, we can see that there are often some major and minor tops being found at that Sun-Pluto opposition in Bitcoin. So I'm continuing to scroll here. All right. And we have that happening here. Right? We've been in a downtrend for over 6 months. We're culminating with the base right up against this angle. And what is interesting here is that also there was a minor solar eclipse on that same day. We also had a new moon, and new moons are typically sell-off periods in Bitcoin. But instead we've had rising prices throughout this time, and then we're coming up to on the 27th, this Friday, on the 27th, we have a full moon. It's actually a total lunar eclipse, and it'll be the longest one in this century. Those kind of things are really effective in trading. Moon phases. If you use TradingView, they have moon phases here, believe it or not. If we go to indicators in TradingView and type in moon, Here are the moon phases, and there they are. So I don't know why TradingView does this. It's backward. It's kind of backwards, but the new moons are above and the full moons are below. I think this is the opposite of what it should be, because full moons are bright and new moons are well, there isn't a moon in the sky with a new moon. And let's look at an instrument like the euro. Where are you at? Well, actually, let's just look at Bitcoin. Okay, so in Bitcoin, if we're in a bull market, full moons, which are the dark circles, full moons mean that we have, anywhere between 14 to 16 days of bullish bias if we're in a bull market. So let's go back in time here and look. There's a full moon, prices rose. Here's a full moon, prices went up. Full moon on the open, prices kind of flat. Full moon on the open, closed higher. Full moon, closed higher. Full moon, it was actually lower. Full moon, higher. Full moon, flat to slightly higher. Full moon, higher. And then when we get into bear markets, we can see that new moons act as areas of selling where you have a strong bias to the downside during that time. So we saw here was a new moon. Consequently, the start of Bitcoin's bear market was at a new moon phase. That is also the exact date that the CME came out with their Bitcoin futures trading. All right. I don't know if that's a coincidence or not, but there you go. So we have a new moon. Basically, what we want to say is that if Bitcoin is trading at a swing high and we have a new moon, then it's going to be harder for prices to move higher. They have a easier time of moving lower. So prices move down. Yes, they sold off. Then we have a new moon in that bear market. Lower prices, flatter, lower to flat, higher, and so forth. You can see this over and over and over. One thing I was talking about for probably the last 4 to 6 weeks with Forex Lens is when we talk about Bitcoin market, is that one of the things we want to see, as far as if we want to see if there's going to be a bullish turnaround, is we want to observe a change in sentiment with these moon phases as we're trading. So we want to see higher prices we want to see a full moon phase equate to a higher price, which we did get. Here was the open. We did close higher. And what we want to see, more importantly, is that we want to see during this new moon phase that we're currently in. Again, new moons mean lower prices, and we're not done with it yet. We have until Friday, but we want to see prices increase during a new moon in a bear market. Because if that happens, generally what you observe is then we have that full moon pattern coming up. We should see a fairly steep rise in value during that full moon. Okay, that is what we want to have happen. We want to see Bitcoin trade higher than the open of this moon phase. We want to see it close higher. All right. And the first kind of sign that you have that the trend is changing is when you get a pretty strong inverse trade during a moon phase in a prevailing trend. So what I'm saying is that when we see some very bullish buying pressure going on during a new moon, that is definitely operating to the inverse of normal price action. And so we should observe prices to go higher as we're getting into this full moon phase this week. Now, prices certainly could sell off. I mean, we've seen those things happen. And we could look back here and see that being the behavior where we had this new moon phase and it traded up really high, and then we just kind of collapsed down there. So keep that in mind. But moon phases are not enough of a tool themselves to determine whether or not you should go long or short, but they can help you. It should be used as a supportive form of analysis, not a confirming form of analysis. Okay. Again, financial astrology is a predominantly a forecasting method. It is predominantly a leading form of analysis, and it's just a very there's a reason people. I'm not trying to sound all conspiratorial, but there's a reason why you don't hear a lot about financial astrology, and there's a reason why most people discount it and think it's stupid. Probably because that's good. A useful form of analysis, if everybody's using it, stops being useful. So I'm perfectly cool with everybody thinking this is a bunch of crackpot stuff. But I'll leave you with this, though. These wavy lines you see on the screen, these are planets. This is all this is. So this is the planet Saturn. All right. It's the longitudinal position of Saturn and then converted onto a price chart. William Delbert Gann had a formula for converting the longitudinal positions of planets and putting them onto a price chart. Okay, so this one is Saturn, and the red lines are just the harmonics of Saturn. So they're you can divide up the line. I think a good example would be, here we go. This is the Australian dollar, US dollar. This straight line, if we want to do it geocentric, these wavy lines, the green line is the actual position of Saturn. All right, look. This is the entire price history that we have for the Australian dollar, US dollar from 2008ish to now. 10 years of history. This isn't a dynamic level. This is a static position. This is like static math. This is not something that you can alter or change. This is just the position of Saturn and put onto a price chart. For whatever reason, the Australian dollar likes to treat this area as a firm area of support and resistance. And the harmonics in between it act the same way. If you're wondering what is geocentric and heliocentric, geocentric means you're looking at this from the Earth. Heliocentric means you're looking at it from the Sun. Oops. I meant Saturn. I meant to change it. So heliocentric, you're going to have a lot more straight angles. Kind of depends on how you want to view it. But yeah. So financial astrology in any trading is a very, very effective form of financial analysis. And as long as people think it's dumb, that's cool. And these lines here, these horizontal lines with the degrees, those are just the square of 9 levels in Gann's square of 9. This is a forecasting tool. You can find the date and time of, you can plot you can determine, okay, on August 27th, what is the price of Bitcoin going to be on August 27th? And, what is the high and the low that it could be at that date? And then plot it out, and you can plan your trading to go there if that is where it is more than likely to go. So anyways, again, this is our first Decrypto market stream. This is going to be free for a while. Then it will be a paid service. We want to keep it free for right now and make sure that people can assess it to see if there's any value to it or if you would find it valuable. And if you want to become a subscriber later on, that is awesome. If not, that is awesome as well. Tomorrow I'll be here again at the same time, and we'll have some trade signals set up for all of you. We'll kind of go over these markets, and then also please do ask questions. Okay, I know that a lot of this analysis is, unless you've taken unless you've had some of the chartered market technician training, this is probably very unfamiliar to you. So please do ask questions. I am a educator first and foremost, and I want to make sure that you are understanding what I'm talking about. I can get a little wordy. My wife gets after me about that all the time. So please ask questions. And then if there's any particular coin that you want to look at, that you would like me to look at, any altcoin, looking at a trade on it, if you want to ask my ideas on it or what my opinions are on it, just purely on technicals. I'm not going to be doing any research papers on it. I don't care about that stuff. But yeah, if you have any of those kind of questions about a coin you want me to look at, please ask, and I would be glad to analyze the chart live with you. And I actually prefer to do that. I prefer to do my analysis on something brand new and live, so you can go through it. So I can go through it with you, and you can see it with me. Again, thank you for coming. Please subscribe and like. And this video will be it's recorded and it'll be published. And yeah, hope you guys have had a great start to your trading day. Hope the rest of your trading day is good. Hope the rest of your trading week is good. And again, please remember to trade wisely, trade smart. Don't trade afraid or excited. And I will talk with you all tomorrow afternoon. Bye-bye.